Sunday, May 26, 11:15 a.m. New York time. Welcome to Winning Wall Street's Money. I'm going to discuss what might be a beginner's guide to many yields. Yields. Explain the correlation they have with equity, assets, aka stocks, bonds, and notes. And you're going to see those trade ideas here you could do off of this. Yields are an asset you could trade in U.S. financial markets, different durations that are up to the 30-year, down to the year and lower. And then we have U.S. Treasury departments that issues bonds and notes against those yields. They trade inverse. Yields go lower, the bonds and notes go higher. Yields reflect the market mindset of Wall Street. That is, every single person that trades in the financial assets has skin in the game. Those yields trade in the free markets. First, the Federal Reserve, they also have a say on setting interest rates. But again, you could trade the yields independent. So I want to show you what's been happening recently. If you've been following my videos, you should be situation awareness. There are certain financial assets, aka certain equity stocks, that benefit from lower yields much more than other financial assets. You have companies that pay dividends and some that don't. Companies that pay dividends on their stock, that's considered the income kind of stocks, versus ones that don't are more recognized as growth. So there are indexes that are also heavily weighted towards dividends, high yield dividends. Those are utility stocks. They pay high yielding dividends. So people that are investing in financial assets, specifically stocks, if they want less volatility and some kind of income, they're investing in companies that are paying dividends. Usually the ones paying higher, which are again the utilities. Well, we're going to look here at a year-to-date daily chart. So you can see the correlation here. The top left is the S&P 500 stock index. Year-to-date, January 1st to now, here's the high. NASDAQ 100, year-to-date, here's the high. The Dow Jones Industrial Average, here's the high. It's selling off. Made a video yesterday on all 30 companies in this index. The Dow Transports, look at that, much closer to the low for the past year-to-date. And the Dow Utilities, remember, buzzword, keyword, utilities, the past year-to-date, or the current year-to-date, there's the high, it's sold off. And the Russell 2000. So this grid at the bottom middle is the utilities index. Well, I'm going to show you the stock ETF that mirrors it. But notice again, here's the high of the year. Here's the low of the year. This index, Dow Utilities, is performing better than the Dow Transports and better than the Russell 2000. It's not a growth index. It's companies that pay high dividend. So if you expect yields to go lower, one would expect these dividends to potentially be acquired more, these companies. If you think the stock market growth is going to go slow down, that would be affecting the S&P 500, the NASDAQ, the Dow, specifically the NASDAQ 100. If you think growth is going to slow down, that's going to benefit the utilities sector, which is paying high dividends. In the S&P 500, there are 11 sectors. I want to focus on the utilities. Okay, again, we're looking at a year-to-date on these charts. Top left, XLK, close to the high. XLV, trending down. XOF, trending down close to the high. XLY down here. XLC, right here, to the high. XLI, close to the high. XLP, close to the high. XLE, trending down off the high. The high was much earlier in the year. It's been trending down. XLU, utilities. Look at that, how it started for the past year to date, grinding up, so very close to the highs. And this is a stock ETF. You could trade this. And then the XORE real estate trending down. Again, the highs were here beginning of the year. And the XLB here. So again, if you notice, the beginning of the year, we were near the lows of the utilities, since then grinding up. That means smart money, institutional money that manages other people's, have been under accumulation buying this and still believing there's value in buying it. Of course, these other ones that are trending down, smart money's leaving them. You wouldn't want to be bullish. You wouldn't want to buy buying the ones that are losing. Yeah, the utility's not the strongest one. But again, you will see momentarily when I show you deep insight on the charts. Let's continue. So we're here looking at 4 grids. The purple line, these are lines. The purple lines represent the same asset. They represent the 10-year yield. Remember, I mentioned there's yields for different durations, 30 years, 5 years, 2 years. Again, this purple line represents the 10-year yield. It's the same in each of them, looking year to date. But in each white line in these grids represent different financial assets. So when we open up this first one on the top left, again, year to date, the purple line is 10-year yield. Still high here. Whereas the white one trending down here is the inverse. It's a treasury, US Treasury 10-year. So you have the treasury, which I told you, the US Treasury bonds and notes trade inverse from yields. Well, currently the yield's trending up here, but it's off the highs, way below the highs. So you have the note working its way back up. So that means you have people that are expecting in the trading market, interest rates are going to be reduced. Again, they can be wrong. The Federal Reserve will set that policy. But the free markets trading are trading where they anticipate yield to be lower. So because they anticipate them go lower, the bonds and notes will be going back up. So they'll be buying the bonds and notes. But right now, again, look at this. The purple line, 10-year yield higher. Let's go to the next financial asset. The white line is the S&P 500. I showed you that on the other one, but here you can see that S&P 500 near the all-time high for year to date. And the 10-year yield, that was the high of the year. 10-year yield is trending down. Yeah, it's a little retracement here, but overall it's trending down. So this is showing the equity indexes, equity stocks are stronger year to date versus the yields. Yields declining. So between these two, the equity indexes, the stocks as a whole, showing better on the bullish side versus yields going down. Let's go to the next. Now the white line here is the US dollar index. It's trending down. Typically when a central bank, aka United States Federal Reserve, lowers interest rates, it weakens the dollar. But again, the Federal Reserve has not lowered interest rates. But the market, the purple line, the 10-year yields, they're thinking yields, markets, interest rates going to go lower. So again, the dollar's falling around, trending around. So again, you will not want to be bullish in either one of these because they're grinding down. Where I showed you S&P 500 would be the better one to be buying. That's the equity indexes, stocks. So I showed you there were 11 sectors in the S&P 500. One of them was the XLU utilities. So this white line is XLU utilities. Right off the bat, you notice it's above the purple line. It's stronger. Yields declining. Money's flowing into the utility stocks. One's paying dividends. So you could buy the stock ETF, XLU. It's strong. Let's go look at all 4 of these again. Top left, it's the 10-year note against the 10-year yield. The yield is still above So I wouldn't want to be buying here the note. Top left, S&P 500. Yes, it is outperforming the yield. It's above. And the US dollar and yield, yeah, very close there. I wouldn't want to be long neither one of them. So again, when you're looking at the XLU bottom right, it's above the purple line. It's a stock ETF. Stock ETF of companies, your utility companies, your electric companies, water companies, which makes sense because they're stock companies. They're coming out of the stock market. Same with here, the stock index. But again, the stock index of the S&P 500 is very broad, has 11 different sectors. If you're looking at individual sectors to consider investing trading, well, we found one that's outperforming the yields, XLU. XLU. And that's a stock ETF. There's a company that manages it. The company that manages it on this website show me the top 10 holdings inside the company. Stock ETF. Well, right off the bat, net area energy makes up over 13%. You might have heard some of these companies, Southern Company, Duke Energy is huge, make up over 7%. So you could buy these individual companies instead of buying the stock ETF, which is XLU. Higher risk if you buy these individual companies. You can already buy the index that manages them. But let's go deeper. Let's go straight to the company that manages it. Again, the company is Select Sector. This is their website. They have many financial assets, but I'm showing you specifically XLU. And we're going to go through the holdings so you can see much more broader who's in them. Because this company that manages it, they choose which companies to have in the utilities and which ones to buy more or less and when to get out of them. But when you go down here on the here index weighted, see again, huge. It's almost 15% of the stock ETF is in this one company. So you can look at that company website. That company stock symbol right there. Let's do that. We're going to put it up here. Again, the purple line is the 10-year yield. Actually, we're going to put it here. The stock symbol. November Echo Echo. November Echo Echo. So the company right here, the white line, is performing better than the yields, just like the stock ETF here, which is a part of the S&P 500. But again, much safer, lower risk to do the stock ETF or the stock index versus the individual. But let's look at a few more. Duke Energy, DUK. You could do this on your own too. UK. Let's go down a little bit lower. PCG. Wait, let's go to the next. Some other the other utility companies, water companies. Let's continue to go look at some more. There's one too. Let's just look at that one. Again, it makes up less than 2%, less than 1.25% in the index. EVRG. So it's performing weaker than yields. So again, because it's performing weaker, that's hurting this stock ETF, XLU. But again, it's such a small percentage of the index. Let's go look at one more. Which one should we choose? Let's do Edison. EIX. EIX represents 2.65%. And again, this changes regularly, the weighted averages. Okay, we'll look at that one. EIX. There you go. So again, single stocks, stock index, S&P 500, the broad market, and the stock sector, XLU. So now you have better insight of what yields are, how they correlate with the overall market from the bonds and notes too. If you want to get access to when the next video is, subscribe to my YouTube channel. If you want access to the video the same day, it's posted my Patreon page. The link's below. If you like my content and want to make a donation, I have a PayPal, Venmo. The links are below in the description. Thank you as always for spending just a little bit of your time with me. That's it for the video. Thanks for watching.